Gold, petro, crypto, 3 money eras, 1 wild story. I'm gonna explain how we went from stacking shiny metal, to pricing the world in oil, to minting internet money, in 3 minutes. First, gold. For centuries, gold wasn't just bling, it was the scoreboard. After World War II is now wine, says now bawatsuer, and san maferrants, with dan at anander the swords sawa bedin dados, frau double borings. But most currencies pegged to the US dollar, and the dollar pegged to gold at 35 an ounce. Simple promise, you could swap dollars for gold. This anchored trust. Governments planned, businesses traded, and money felt solid. But the world changed faster than the math. America spent big, on growth, on social programs, on Vietnam. Dollars flooded out, gold didn't keep up. In 1971, President Nixon said, "No more gold for dollars." That's the Nixon shock. The gold window closed. Boom, fiat era. Money now ran on faith in governments and central banks, not metal. So why didn't everything fall apart? Enter the petrodollar. In the 1970s, the US struck deals with Saudi Arabia and others. Price oil in dollars, keep oil supply flowing, and recycle those dollars into US assets. That move gave the dollar a new anchor. Not gold, but energy. If you needed oil, and everyone did, you needed dollars. This created constant global demand for USD. Countries held dollars as reserves, central banks stacked US treasuries, and a giant loop formed. Oil sells in dollars. Dollars get saved and reinvested. US can run deficits more easily, and the dollar stays king. It wasn't free. The 1970s had inflation spikes. Volcker slammed the brakes with high interest rates in the 80s, causing pain at home and debt crises abroad. Still, the petrodollar system kept the dollar at the center of trade and finance for decades, but tech and trust kept evolving. Cue crypto. In 2009, Bitcoin showed up, code with a hard cap, no central bank, global from day one. People called it digital gold, scarce, portable, censorship-resistant. Then came thousands of other coins, blockchains and stablecoins, tokens pegged to dollars that move at internet speed. Now you can send value like an email. Why does this matter? Because money is power. Nations compete over it. Some push alternatives, euro, yuan, gold reserves, even pricing a bit of oil outside USD. Central banks test digital currencies. Meanwhile, crypto builds its own rails, 24/7 markets, open ledgers, programmable money. Does this mean the dollar is done? Not so fast. The US still has deep markets, strong institutions, and massive network effects, but the monopoly on how value moves is cracking. Today you can hold gold, tap dollars, and use crypto, all at once. Here's the big idea. Gold grounded trust. Petrodollars globalized it. Crypto is unbundling it. The future might be a portfolio of monies, energy-backed realities, policy-driven fiats, and code-based assets coexisting. So when headlines scream end of the dollar or crypto to the moon, remember the pattern. Money shifts when technology, geopolitics, and trust realign. Gold. Petro. Crypto isn't a straight line. It's a toolkit. Use it wisely. Diversify your thinking. And watch where trust flows next.